Hey guys, hope you are all having a great day. It's been a wild, crazy day for all stocks in general. Let's not fool ourselves, GME and AMC both got dragged through the mud, but this has been expected. I have been warning about this for months now, so it's nothing that shocking to be honest. Market conditions suck, and until we rally overall, things will remain boring on the charts for a little while. We have some brief updates regarding Evergrande and other topics, and then we are just going to recap today. I will also link my morning video in the comments below in case you missed it. Today we discussed how the real reason why gas prices have blown up through the roof, linking it all back to Wall Street. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Let's talk about stocks in general. The S&P 500 lost a lot of ground today, as losses in the technology sector weighted against gains in cyclical sectors. The US stock index fell 0.7%, while the Nasdaq Composite fell 1.5%. The Dow Jones was neutral. Trading has been choppy for a couple of weeks. I want to say ever since the last big Jerome Powell hearing, where he said the road ahead wasn't going to be smooth regarding inflation. A lot of uncertainty surrounds the markets, and I feel until we get some serious positive changes, we will not see markets fully rally. Right now, most investors and Wall Street in particular are closely following the developments coming from the Fed. We could say that the Fed right now is the most important entity which will either make or break the markets per se. Everyone is watching their calculations and measures in tightening monetary policy. Everyone is interested in the rates being increased, which could happen as soon as March. The Fed's James Bullard also said yesterday that instead of 3 interest hikes, the Fed is now most likely to do it 4 times, which makes the path forward way more uncertain for everyone. Obviously, the Fed's most important task right now is reducing inflation. That is the biggest thing on the agenda. The steps to do so and the probability of radically changing things for the better is what is being questioned. The market is currently balancing 2 major things: less support from monetary policy and earning figures. Investors examined some data today, and we now see that filings for jobless claims actually rose higher than economists expected. As you can see, markets are scared, and because of that AMC and GME have been trading weaker. Shorters are making the current circumstances worse, as they have way more leverage to hit us harder when we are low, which is why we are nearing the lowest points again. However, data shows that retail investors still remain bullish, and that nobody is leaving. Inflation is at its fastest pace in 40 years, and of course it was bound to have an effect on markets. I have been saying this for months now, so this dip should not be surprising if you have been watching this channel closely. Things are happening just as we expected, so don't freak out, and if it gets too much, simply close your broker app for the day. Chinese developers are scrambling to negotiate new set of terms with creditors to avoid defaults. That's right. The list of cash-strapped developers keeps on rising as we predicted, in direct contrast with what Chinese officials told us was not going to happen. Evergrande is set to announce whether investors will give them more time to repay an onshore bond to avoid yet another default. The deadline to vote on this 6-month delay for redemption will be soon. Evergrande may have met payments on onshore bonds, but defaulting on offshore bonds has left investors incredibly frustrated. And like I said, it's not only Evergrande. Chinese developers in general are currently experiencing a liquidity crisis as regulatory curbs on borrowing continue, leading to a series of offshore debt defaults. The World Bank Economic Prospects report announced that a prolonged downturn in China's real estate sector would have significant economic reverberations, which is as expected when the combined onshore and offshore liabilities amount to almost 30% of China's GDP. New developers facing serious challenges and trying to seek out extensions to their debts are Shimao Group and Yuzhou Group. Shimao Group will be holding an online meeting with creditors on January 17, with the intention of having a vote on payment extension proposals. Shimao said last week that they missed a payment on a $101 million trust loan, with the S&P rating agency downgrading the firm again to AB negative. Yuzhou also announced an exchange offer for 2 of its 2022 dollar bonds, due later this month, totaling a worth of $582 million total. They are seeking to extend the maturities by 1 year to avoid defaulting. And guess what? I guarantee you the list is only going to grow significantly in the coming weeks and months. Developers are desperate to raise funds to repay debt, and with Beijing tightening policy, they are having a really hard time affording themselves liquidity to make good on their debt. That's all that I want to talk about in regards to small developments, so let's now talk about today. The Fed submitted over $1.636 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 51% of the total volume today, while dark pool trades for GameStop accounted for 48% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 9% for the day. We began trading pretty bullishly during the pre-market, having a reversal and running from 22.20 to 22.90 as we neared the opening of the markets. Once markets opened, AMC fell down, finding support at 22.30. It quickly bounced up, reaching and touching 23.15. It was unable to hold this level though, so AMC ended up falling back down again to the lower band of the VWAP below 22.20, where it had found strong support during the pre-market. It was at this moment that I knew today we were going to testing support and retracing overall. AMC quickly bounced up again, passing the VWAP and reaching 22.80. However, it was unable to consolidate above the VWAP, and instead started crashing down as shorters really pushed the stock prices down. AMC was dragged down all the way to 21.60, below the lower band of VWAP. It attempted to run and retouch that 22.20 support wall that has now become a resistance wall, but shorters stomped on it, sending it down to 20.53. AMC did not bounce back strong or recover, which shows just how manipulated and beaten the stock is. AMC closed at 20.66, way below the VWAP. As for what to expect tomorrow, AMC will find support at 20, then at 19.35 and then at 18.82. Resistance will be met at 20.22, 21.25 and 22. It is really hard to decipher where the strongest support will be because AMC hasn't been this low for so long. It is clear shorters want to end the week with AMC below $20. AMC is really weak, and that last couple of minutes of trading, with AMC unable to bounce back up, showed just how weak the stock is at the moment. Of course we are way oversold, but that will not matter. I think with more market weakness looming, AMC will be hit really hard and be sent below $20 for the first time in so long. However, do not mistake stock weakness as fault of AMC. AMC as a company is performing well, and they are set to have a ton of releases this year. Their next quarterly earnings is approaching soon, and you will definitely want to add more as we continue moving forward. This company has a lot of challenges, but I am certain that management is doing a great job trying to shift things around. Stay bullish and buy if you can tomorrow. GameStop traded bearishly, losing over 4% for the day. The stock opened to a dip that took it from 129 to 126.22. GameStop then bounced up, breaking past the VWAP and reaching 130.47. GME would then slowly break support, eventually reaching 127 as a strong support wall. If remain trading between this wall and the VWAP slightly above 128 for a little while before breaking resistance above it, reaching 129. Shorters brought it back down, but GME was stubborn about being above 129, so it broke above it again. GME was then brought down again, with this time shorters unleashing a ton of pressure that had GME break that 127 support wall, this time falling back down to 123. After an attempt at bouncing back up above 125, GME was once again hit with a short attack that brought the stock down to as low as 121.69. GameStop ended the day at 122.48, way below the VWAP. As for what to expect tomorrow, GameStop will find support at 120, 117 and 112. Resistance will be met at 125, 129 and 132. GameStop got hit really hard today, in particular during the last couple hours of trading. It kept being dragged down to the point I think there is a good chance shorters could bring it below that 120 support. GameStop has a ton of bullish catalysts coming up soon, so whatever happens, don't lose sight of this company's strengths. NFT marketplace is worth billions of dollars and GameStop is poised to have the biggest and best one of them all. We are still waiting an official announcement and release date, but until then, I plan to buy as much as I can in anticipation for the majestic run it will have. And that is all I have for you guys today. Let me know what you thought of the video. I will link this morning's video in the comments below. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.